This roadshow is brought to you by ResearchBytes.com.
Good evening, ladies and gentlemen. Thank you very much for being here for our Q1 earnings conference. As usual, request Chandra to say a few words, and then after that, we'll take your questions.
Thank you, Pradipta, and good evening to all of you. Happy to meet all of you for sharing details regarding our Q1 for FY16. First, let me start by saying that we have delivered a very strong quarter, and I want to give you some details. The revenue growth on rupee terms was 25,668 crores. On rupee terms, it's a sequential growth of 6%, and on a year-on-year basis, it's 16.1%. And the net income has come out 5,709 crores, and on a year-on-year basis, it's about 13%, and on a sequential basis, it's about 48%. But the operating margin was delivered at 26.3% and net margin at 22.2%. I am saying it's a very strong quarter for the following reasons. First, the volume growth for the quarter is 4.8%. And the CC growth on a sequential basis is 3.5%, and the CC growth on a year-on-year basis is 16%. If you look at from a vertical perspective, most verticals have come very strong. BFS has delivered over 6% on a constant currency basis sequentially. Retail has delivered 5.1% on a sequential basis on a constant currency terms, and life sciences has delivered over 7% on a constant currency basis on a sequential basis. North America has rebounded very strongly with a sequential constant currency growth of 4.4%. And if you look at the deal wins, North America has delivered 5 large deals, Europe 2 large deals, and 1 each in Asia Pacific and UK. Even from a vertical perspective, the deal wins have been pretty strong across verticals. We've delivered 3 large deals in BFS, 3 in retail, and 1 each in telecom, manufacturing, and media. So overall, from a deal momentum point of view, and also from a key verticals point of view and the geography point of view, the important verticals and geographies have delivered in core markets very, very strongly. Then from an employee addition point of view, we added 20,302 associates, taking the total headcount to almost 325,000, and the utilization has tracked nicely at 86.3% excluding trainees. This is the overall metric. If you look at the margin point of view, I think the margin in a quarter in which we have delivered, we have given industry-leading wage hikes, delivered an operating margin of 26.3% and a net margin of 22.2%. The cash performance has been very solid. We had a cash of little over 25,900 crores in Q1 of last year. During the year, we paid out dividends over 17,000 crores. We paid employee bonus of about 2,600 crores, one-off reward. Then we have spent another 2,500 crores on capital, and after all that, we are again back at 25,917 crores cash, which is pretty much the same as the cash position at the beginning of last year. Then coming to the overall demand perspective, the demand is pretty strong. The customer metrics bears it out. The customer additions on $100 million, $50 million, $20 million, $10 million across the bands have grown nicely year on year as well as on a sequential basis. Then looking at the digital, all our customers are investing significantly in digital. We are seeing huge amount of traction in digital, and we have embarked on one of the largest ever training in digital areas, training about 100,000 people this year with a strong digital platform which we have created, and with huge content on a huge variety of technologies customized for each of the industries and markets that we work. And we also launched our automation platform, neuroscience automation platform, Ignio, which is gaining huge traction with customers. So overall, we remain positive about the year and gearing ourselves to capture growth. Thank you so much.
Thank you, Chandra. We'll take questions. Nisha from ET now.
Good evening to all of you. Chandra, 3.5% dollar revenue growth. Street was expecting higher. It's below the street expectations. Could you take us through the details and the composition of the volume growth that we have seen, the revenue growth that we have seen?
So as I said, I think there are 2 or 3 comments I want to make. One is from a volume growth perspective, we are very happy at 4.8%. And we have had a realization dip of 130 basis points, and that's why you see 3.5% constant currency growth. Basically, realization has been pretty flat all through last year, beginning of the year, end of the year, if you look at it. Last 2 quarters has been a realization gain, and this quarter has been a realization drop, but there's nothing to do with pricing. We believe that this year also, the way we look at it, the pricing is pretty stable. That is one point. From a growth perspective, the areas where we have lagged growth is, one is Diligenta, which we had forecasted before, and then we had dips in Japan, and we had dips in Latin America. These 3 markets together have delivered a degrowth amounting to roughly $20 million. That $20 million will take you to 4%.
That's right. It's a deficit or a mismatch of only $25 million.
Yeah. And that's what it adds up.
Yeah. Realizations dip exactly for what reason?
I think, there are so many. See, one of the reasons we explained some time ago that we don't want to break between pricing and offshore movement, etc., because there are so many moving parts. Sometimes it is service mix, sometimes it is offshore movement, sometimes it is number of working days, depending upon the type of contracts you have. So all of this put together is the dip that you have, and it is nothing to do with pricing.
All right. Pricing remains strong, but on-site offshore mix is also something that may have changed.
3 or 4 multiple factors. That's why I'm not breaking it up.
All right. Rajesh, I'll come to you. Good performance when it comes to margins, higher than what Street was expecting. So what are the components? Can you break it up for us?
So the margin, basically, we have given, again, industry-leading wage hikes, and we have taken the entire impact of that in this quarter. So that has had an impact of 190 basis points on the margin this quarter. We have had a benefit from the currency side of 70 basis points. And we have had operational improvements of 30 basis points, giving us a net negative impact of about 90 basis points. So that's the broad margin structure.
All right. And as far as attrition is concerned, Ajoy, that will be one thing that the markets would be also reacting to. Mm-hmm. You're just pushing the bar when it comes to the attrition rates higher and higher from being one of the lowest in the industry earlier. Is it going to get worse from here? And what is the scenario? Can you give us details on that attrition? What is the reason behind it?
Yeah. See, attrition, as we reported, is last 12-month attrition. So if you look at the last 3 quarters, that is common in this particular quarter as well. So higher attrition in the previous 3 quarters you will carry that forward. The second thing is Q1 usually is a seasonality that comes in, which is people leave because of higher studies, and people leave at the end of the year when we do our performance appraisal and all that. So there are some people who do decide to look for options outside. So these are the 2 factors. Q1 usually is higher, but it is the previous thing plus these 2 factors that has taken it up from 14.9 to 15.9.
And it could get worse from here, is what I wanted to understand.
Correct.
Is this the limit, or are we looking at a higher number going forward? Because from Q4 to Q1, now it's a massive change as well.
See, basically this higher studies, if you see, that goes on up to about July time frame. That's it. And our wish, or what we are trying to do is, we are trying to bring down the attrition definitely from where it is going forward, to bring it down. And there are a number of steps that we are taking, as Chandra announced, the digital training for 100,000 people across the organization. So if I go around and when we talk to people, the general feeling is pretty good. So there is not a major concern from that point of view. But from the overall number point of view, definitely, it's higher. It's higher at
Is there a
15.9.
differentiation between voluntary and involuntary? That's
There are 3 or 4 factors. One is that I think to answer your question, since it's a 4-quarter base, you need to allow the lag effect to reduce. Okay, because we have had a high attrition period of last 3 quarters, at least definitely last couple of quarters. This is the 3rd quarter, so it will taper off after we cross that period. And also the fact that he said Q1 is typically higher, even seasonally also, that also adds to it. But I don't think there is a major cause of concern. We'll get it under control.
all right. And Chandra, one more question. With 3.5% dollar revenue growth this time, how bright are your chances of also beating, as you have always done, the industry growth rate that NASSCOM has suggested? Dr.
Yes, I don't want to give any guidance, but as I have said, we are very happy with the performance, because if you really see, I reeled out all the different industries, all the different markets, it's pretty strong. BFS on a sequential basis delivering 6% volume growth, constant currency growth, revenue growth, 6.1%. Retail 5.1%, life sciences 7%. Telecom bounced back this quarter. Telecom is close to 10% on a sequential basis. So, but telecom still is volatile, so I'm not immediately saying that going to immediately factor in a huge growth. But telecom had a bad quarter last quarter. Energy and utilities, okay, even though energy had a huge pressure last quarter, and we said energy will continue to have pressure. Utilities bounced back very strongly, so that together they delivered little over 5% constant currency. So all our sectors are performing exceedingly well. The sector in which we have got impacted is manufacturing, primarily because of the impact of Japan and the Latin America, the emerging markets, which went down the 20 million. That did have impact on manufacturing sector, and we went down in media. Okay, so apart from that, this is the actual $20 million miss. I gave you the math. So so we are very positive, or we are investing hugely in digital training. Deal wins are pretty strong. Customer migration is pretty strong. So we remain very positive for the rest of the year.
And is Greece going to pose new set of concerns, because Europe has been a good market
No,
for
we
you so far?
have, see, Europe this quarter has grown on a year-on-year basis 19%. I think it's fair to say that my view is that neither Greece nor China is going to cause any immediate issues for us.
But energy will continue to be soft. because
Energy will
again,
be
crude
soft. Energy will be soft. See, energy will be soft, telecom will be volatile. We just have to be prepared for that.
But one question, that Chandra, it does put you under pressure with 3.5% dollar revenue growth this quarter, where Q1 is supposed to be the stronger quarter. It puts pressure on all the remaining quarters for you to perform very well to reach that industry leading figure then.
Pressure is something that you interpret. I'm not saying. So
Thank you.
pressure is something that you interpret.
Thank you, Nicha. Kritika from CNBC.
Ajoy, just taking from the attrition point, obviously 15.9 is a high figure. Your comfort range has typically been, yes, you don't give guidance, but your comfort range has typically been 12 to 13%. In the next 2 quarters, would you be able to come back to that, or would it take a couple of quarters, maybe more, to be able to arrest attrition and go back to the 11.5, 12 figures?
Our goal definitely is to bring it down, and as Chandra was mentioning, and that is what we are taking multiple steps to bring down the attrition under control. So that's what we will be doing. Whether it will come down to 11% next quarter
after
that is very difficult to say
It
at this
can't
point in
come
time.
next quarter because of the lag effect. Okay.
So it will take time.
Exactly.
Yeah.
So in the next 2 to 3 quarters, or can you give me a timeline as to when you would be able to arrest it down to the comfort range that you always look at?
The comfort range will also depend upon the kind of jobs and everything else that you do, and if it is more of BPO or different geographies, there are multiple other things that comes in. But all our attempt is to bring down the attrition level from 15.9 going forward. Yes.
Okay. Rajesh, how much of a concern has visa cost been this time? Because a couple of your peers have raised concerns about visa costs hitting significantly this time and has forced them to give profit warnings, etc. How much of a concern has visa cost been versus last year?
So on a year-on-year basis, there's not much to talk about. It's a normal rhythm, and it comes in, and there's nothing for us to call out on visa cost.
There wasn't a major impact on margins for this quarter?
No, compared to the last period.
Previous year. Okay, in that case, can you just break up margins as well, Rajesh, in terms of the impact of currency, impact of the wage hike last quarter?
Yeah, as I
And
said, the
pricing.
impact of wage hike was 190 basis points negative. The impact of currency was a positive 70 basis points, and operational improvements contributed 30 basis points positive. So overall, about 90 basis points negative. The margins reflect growth in our core markets, which are typically our more profitable markets. So the growth in North America, growth in BFS, all of these are contributing to the margin profile. And we are fairly confident about that profile continuing.
All right. Chandra, in terms of the overall outlook, yes, I know you can't give guidance, but if you see the commentary that you made last year in Q1 of FY15, as you're starting FY16, there is a sense of caution, not just for TCS, across the industry. What is different as we enter FY16? What really, because there are evident volatility figures, there are evident matters of concern which everyone is talking about. But we don't have any set areas as to why really is the industry worried about FY16.
No, I think I have been very precise. I don't think that my commentary this year is any change from last year's commentary.
Okay.
The only things that I have pointed out is that we have clearly said that Diligenta is going to take a few quarters. That I have, but you should also see it in perspective. Diligenta, size of Diligenta and the overall scheme of things is very small. But when it degrows, if it degrows, let's say 3 million, 4 million, whatever be the number, to that extent you will see that pressure. But you have to see it in perspective on a $4 billion basis. If one unit, you have a gap of 5 million or 4 million. So what it does. The second thing is that telecom, we have said, is going to be volatile, and that we have been saying it for a long time. Energy is the other sector we have called out. And also you should realize that energy is not even 1 or 2%. It's in that range of the overall business. Business size of energy exposure for TCS is very low, and Diligenta is very low. Those two are very small businesses. But we are calling out because you guys are precisely monitoring us on a 10, 15, 20 million basis. Because the margin of error here is not 50 million or 100 million. The margin of the estimate is 15, 20 million. So it's very, even the 4 million, 5 million becomes important. That's why I have called it out. And this quarter, I think the volatility of, the smaller units, LATAM is a smaller unit, Japan is a smaller unit, and Diligenta is a smaller unit. All three having a degrowth, all at the same time, even though they are volatile, they don't have to happen in the same quarter, but there you go.
In terms of client uptake,
so that you can add it up.
But so you say in terms of client uptake, sir, in terms of deal wins, in terms of deal pipeline,
look at the constant currency growth in every vertical, and look at the constant currency growth in North America. What a rebound from last quarter to this quarter in such a large base. And the deal wins is 5 large deals in North America, in United States basically, and across all verticals. I think it's pretty strong.
Okay, so going ahead for the rest of FY16, deal wins continue to be steady.
I think
across.
so. I think so.
Okay, last question then. There's an investigation in the US with respect to one particular contract. There's another IT company as well that is in the investigation. How much of a concern is that for the company right now? Have you factored that in terms of your...
So I think, Kritika, on this whole visa regulation, in ED, the investigations is something that happens all the time.
Okay.
It is not one particular time it happens all the time. The only thing I can say is that TCS has got very strong processes and very rigorous in terms of implementing its processes, so that we are compliant all the time.
Okay. Also, sir, I know I said there's last question, one last one as well. There seems to be sudden noise again about immigration norms, about visa costs going up. This happened about 4 years ago. Is this just an election rhetoric, or are you slightly concerned with respect to some kind of tightening coming in US?
See, we have always said that as long as there is a jobs pressure in any market, there will be regulatory changes. So our aim always has to work with each market and be compliant and do all the right things, so that we are able to do what we have to do in the right way. And that has been whether it is the United States, whether it's UK, whether it's Australia, whether it's Canada, all these markets have gone through regulatory changes.
Okay.
And sometimes there is a discussion, but there may not be a change. Sometimes there is no discussion, there may be change. So, but we just have to be cognizant of the fact that these are things that are necessary to comply with, and we have every effort and every intent to comply with each market regulation.
Okay.
Same thing in India too. It's not that only outside, even in India too. There is a change, we have to comply.
So speaking of India, how has the Indian domestic market been, sir? Because there has been pressure in the domestic market, but it's been softening gradually.
So we have said that Indian market is still volatile. Still we are not ready to call it out that there is going to be a big growth. And we have had a decent performance this quarter. I think, if my memory is right, it's about 3%, I think, growth, on a little over 3% on a constant currency basis. So I think it's okay. Nothing to, no special mentions.
Thank you, Kritika. Swati from Bloomberg.
Yes, so we'd like you to talk about the digital revenue and what sort of growth do you expect from that?
So I have said that the digital revenues are pretty strong. We have had a very good growth on a sequential basis. In fact, as the year goes, we'll give more data. But as of now, you should see the commitment that we are making in terms of training the 100,000 people is a clear indication that we are seeing huge growth, and it's a double-digit percentage of our revenue.
So my other question is the artificial intelligence product that you have invested. Could you tell us something about the pricing?
I can't tell you about the pricing. We announced it on June 4th. We are sitting here on July 9th. And we have a lot of active engagements going on. And we have, in principle, concluded 3 deals.
So how is it helping your revenues?
Not yet. Nothing in this quarter.
All right, so in the retail, infrastructure, telecom, energy sectors and insurance, would you venture into such?
So I thought I gave about all the sectors. Huh? The only thing I said is the energy sector is under stress. It will continue to be, considering where the oil situation is. Telecom will be volatile, but otherwise I think nothing to call out.
Thank you. That's it. Thank you. Amol Z Business.
Yeah. Hi, sir. I remember a year back you had said in the second part of the year perhaps Indian market will improve. You just partly answered that question, but I would like to understand in a more explanation, because Digital India campaign is also going on. Do you see now the more deals are coming from Indian market for IT companies? Do you see this sector is really growing now, because it's been more than a year since the government has come into the picture?
So I think what I have said is that we have very strong hopes in the Indian market. We do believe the market has a huge potential. That's why we have stayed very invested. And lot of factors play in the volatility of the Indian market. First is our own revenue mix, because there are still no annuity contracts in the Indian market. Indian market is more development, system integration, transformation, mission mode projects. Those kind of projects make up the nature of the business in this market. So till this volume scales up significantly, you cannot say that it will continue to grow in a particular fashion. But the market has a huge potential, so we stay invested and we are very positive about the market. But I'm not going to be able to say that there's not going to be volatility. That's the nature of where we are.
Sir, you said that energy will be soft and telecom will be volatile. We have seen a lot of fluctuation in the oil prices. What is the sense actually you're getting from the oil companies or whatever in the energy companies? I mean, how soft it will be, and also if you could explain how little telecom sector will be.
It's very hard to say. As I said, the best I can give you I have already given. And the only thing is the oil sector will take time to recover, I feel, from our own point of view. It's not going to be a big swing overnight, but the exposure is low. And on the telecom sector, I think if you see over the last 6-7 quarters, it has been like this. So because of our strong presence in different markets, and when we have a hit in a success in a major market, no hit in an emerging market, then it can change the other way. So those are the things.
Ajay, you gave reasons why the attrition is really high. But if I ask you, what are the initiatives that you're taking? You just said that you're taking multiple steps to reduce the attrition. If you could explain what are the steps that you're taking, and also, by any chance, are you trying to restructure the pyramid?
No, there's nothing to do with the restructuring of the pyramid at this point in time. If you're hinting on the involuntary attrition and voluntary, that has been very similar to all the quarters that we have had. It's nothing related to that. See, from a overall point of view, as I mentioned, Q1 as a cyclical nature or a seasonality is what is playing out. From steps point of view, is connect with the employees. That is one that is happening on a regular basis. The multiple initiatives in terms of career opportunities, in terms of learning and development, in terms of ensuring that people do develop competencies that are needed for them to be ready and participate in the growth. And so these are various things that are going on at this point in time.
Joshel, ET.
Hello, sir. So, in answer to Swati's question, you said digital was double-digit contributor was to TCS's revenue. So that implies you're at $1.5 billion a year in digital.
That implies more.
Much more than. So, can you give us this? Because the first time you've ever given even a hint of a number in digital. So, sir, could you break it down further if I'm not pushing my luck?
It's 12.55% on a conservative basis.
All right, and
It's a 12.5% on a conservative basis.
so and sorry, I have more questions. So at the Morgan Stanley, you gave the keynote over there, and you mentioned that from your platforms, TCS is at a run rate of over $500 million a year in revenue. And so in your presentation, you said you've added 38 new clients, this quarter. So just trying to understand, so what is the growth coming in from the the cloud platforms?
We'll give you more data. As of now, as I said, see, when I say our digital business has got a huge traction, you should basically take these data points and read into it. So the 38 wins in platforms is a huge win in one quarter, but the revenues have to come. It will take time. And also, these are small platforms at this stage, so you can't just put huge numbers on it. But the traction from the customers is pretty good.
So specifically about traction, one of your larger US competitors said that digital is growing at about a 30% year over year. So is that the kind of number we are seeing with you too when you talk about traction? Because traction.
Just I've given enough data. Thank you.
Okay, those are my questions.
Varun from Mint.
Hi, Chandra. Here.
Hi.
Hi. Couple of questions. Firstly, what really happened in Japan, Latin America? Like you said, it all happened in this quarter. Are there any specific client-specific issues? What really happened?
No, there is nothing client-specific. I think these are, whenever you have a market where your size is still not at a stage that you can have a very strong predictability on a quarter-on-quarter, these things happen. One is that the business mix sometimes. Sometimes the number of engagements you have, and some will get completed, some will not start on time. So those are the kind of things. It's more because the size of the business and the nature of the business. It is nothing to do with any specific clients.
Okay. The second question.
And also Japan, you have to appreciate that we are going through an integration, and it's only 3 quarters with our with the
Mitsubishi. Right. The second question here, 3.5% dollar growth first quarter. This is the lowest in last 5 years, 6 years. Correct me if I'm wrong. Now with all the volatility, with so much happening, uncertainty, will it be fair to say that for Indian IT companies, the new normal should be 3.5 to 4.5% band for every quarter? Gone are those days of 5.5%, 6%.
I'm not going to make any comments on that. I'll talk for TCS, and even for TCS, I can't give you guidance. So,
but is this the new normal?
Can't tell you.
Fair enough.
Ask questions for which I have answers.
Fair enough. Help me then understand why the realization has come down. You said 3-4 colleagues have also asked. Just in simple terms, 2 points here, Chandra. Why the realization has
as I said, see this, I think if you have tracked us for a long time, we were the ones to say that realization should not be broken up in so many minute details because the nature of business has dramatically changed. See these metrics when you tracked at TCS, which had operation in 3 countries or 4 countries with very limited set of services, Today, the number of services, the services mix can change. The company has got a global footprint. The locations can change. People mixing locations can change. The type of the contract and the number of working days in those contracts can change. The type of billing you can change. So many factors are there. So overall, we track our pricing. Okay, pricing is stable, and the realization is volatile. Last 2 quarters we had a positive, and the previous 1 or 2 quarters before that we had a negative. So overall for last year it was stable. Actually we reported that. Actual numbers we reported. Last year on a 17% was our constant currency growth last year. And the entire 17% is volume. I think it is 17.01 volume.
Right.
And 17% was the company growth rate. Practically pricing and realization was flat. So that's the trend we are seeing. So I can't just give you, we can build very complex spreadsheet, but then so many moving parts, it's very difficult to.
Fair. Just last clarification, attrition, lot has been spoken. This 15.9 includes the BPS. What's for IT services alone? What's the attrition?
See, the attrition number is India, overseas, BPS, IT all put together,
Yeah.
and we don't.
Until last quarter, you
We don't
used to
break
give
out.
for IT services attrition. That's why I'm trying to understand. What's the attrition for just for the IT services business?
I don't have it offhand. Maybe we can talk offline.
Maybe we can discuss it later, and I can give you offline afterwards.
Fair enough. That's all. Thank you.
Okay.
Sheetal, Business Standard.
Hi, sir. Sir, you have emphasized, particularly in your annual report and on time and again, that you are looking at increasing the mining of your existing clients. So how is that? What is the update on that particular? And how have the top 10 clients? How have the top 10
we
clients
have stopped
grown in the
reporting
quarter?
top 1, top 5, top 10.
Yeah, but I'm just trying to
But
get
if
a
you
color
look,
on.
so we stopped reporting. So, but overall, if you really see, the client mining has been exceptionally good. I can say that statement. And the revenue bands, all revenue bands, the number of customers have gone up across the board and gone up very nicely.
So, what has been the forex gain this quarter? There have been some expectations on that front.
Yeah, so are asking the hedging gains or the
Yeah,
on the
yeah.
other income line?
Other income and
On
hedging.
the other income line, we have about 190 crores is the gain. This compares to 663 crores for last quarter, so giving us a swing of about 400 odd crores there. And overall other income is at 771 crores.
Thanks.
Kenan, Dow Jones.
I just wanted to clarify if digital is 12.5% and if I assume that Diligent is part of it and Diligent is degrowing, so it's not a part of it?
It's not a part of it.
Okay. The other question is...
I said conservatively. So leave it at that. We will give more data as the year goes by.
Yeah, that would be appreciated. Because building on Jashal's question, so what happened is when your a large US competitor made statements, so they did mention Indian IT firms, and out of that the best guess is it was meaning you, saying that in digital, which is growing as an industry, they see the biggest challenge coming from Indian IT firm. So just wanted more clarity and more...
See, Kenan, I have given you enough clarity. I said digital is the fastest growing and we've got a huge traction. I've given you enough data points. I will not be able to talk about competition.
Sure. Just in terms of more commentary on digital, when you are saying you're training 1 lakh people, what kind of training and by when do you think they will be able to
It's going
go
on
live?
currently.
By what is the lag time for them to
there
go
is no,
live?
See, this is not something that people attend a course. See, it's a digital platform. It's a very comprehensive digital platform and all competencies required. I mean, I can't list you. There's so many competencies, 100 different competencies. And each vertical requires different set of competencies and all those courses are content. It's a content-rich digital learning platform and people are already using this platform. But we will add more, we'll enhance it and all those things will happen. It is just not a one-off exercise where, there is a start date and there is an end date. Okay, this is a journey and it's a huge investment and we're pretty excited.
And just a query that what were the challenges that you faced? Because I remember when you took over and you came in, there was such a focus on cloud, there was such a focus on moving away from the traditional way work was being done. But we are seeing results now. So what were the challenges that were involved? Because there was a huge gap between when you started services on the cloud and moving TCS towards that. So if you could just if you could just explain what were the challenges you faced in getting customers on the cloud, and now the traction has gone up. We didn't see it earlier.
No, it's just not a challenges. I think all these technologies have their own adoption time. You see, it's not a question of you having the solution. You also, the problem, solution, customer readiness, financial budgets, so many things have to come together. You know what has happened in the last 5 years? I think financial budgets from clients' point of view, especially 9, 10, 11, 12, have been under a lot of pressure. And so now the customers are doing both, right? Bimodal, right? So all those things are happening. So I don't think it's a challenge. It's a question of readiness. The market will adopt only at a particular time, and we just have to be careful. You don't want to be too much ahead, you don't want to be lagging behind, so you've got to be very close to the market. And that requires constant dialogue with your customers. And some customers are in a stage that they can adopt faster. Some customers will delay, and so many, it's their own scheme of things, if you will. So, but I think we've made huge investments, huge capabilities, and we are enhancing those capabilities by creating a very strong digital platform which we have launched and which is pretty good actually. I looked at it and it's very strong.
In terms of pricing, you said it's flat for the past 1 year. So by when do you expect?
It's been flat for more than 1 year.
Yeah.
So we think, I think as I've always said, I think it's not a time that we can see a pricing uptick. But as the digital revenues pick up in scale, and we have said that over the next, I can't give a particular number, over the next set of years, everything will become digital. Okay, that is one of the reasons I have always said that it's going to be very hard to report digital revenues because everything is going to become digital. Okay, digital plays across all service lines. You've got the cloud in infrastructure, you've got the mobility in ADM, you've got the channels, you've got big data analytics. So it plays across all the segments, and that adoption is happening faster. And so we need to wait and see.
Nisha.
So Chandra,
Again?
you said 12.5% of consolidated revenue is your digital revenue. So just
there are some exclusions. I think currently you take that as the number.
So just a rough back of the envelope calculation would mean that about $2 billion is the kind of revenue that you get from digital vertical. Now, 1 year back, you said that 5 years, $5 billion of revenues from digital. And if you're going at $2 billion, so are you going to really supersede that particular bit already?
In all likelihood.
In all likelihood. So how much has accumulated already of the $5 billion that you stated, because 1 year has crossed and you're at $2 billion already?
I've given you enough data. Now you can put your spreadsheet.
All right. So now what is the next goalpost and the target that you can come up with? Because 5 billion is going to be superseded for the first time. You're saying that?
We'll see. We will see. Yeah.
Thank you, Nisha. Kritika.
So I know we've spoken a lot about all things digital. You said this about 2 quarters ago that you may in time consider this. Given that it's 12.5% of your revenues, by when, or does it at all make sense to start taking it or calculating it as a separate business unit or separate?
It can't be done like that because, as I said, just now explained, digital pervades all solutions.
So there won't be a time where, because some of your peers have done that, there won't be a time where you look at
digital is getting into the DNA of every line and every industry. Okay, it's going to be pervading through all industries, more so in the consumer-based industries faster, but with the Internet of Things, it's also getting into manufacturing and asset-intensive industries, and across service lines, it is growing. So given that, I think that's the way we look at it. That's one of the reasons I have always said that let's not compute that. But this is more to give you an idea that digital is growing faster. And the adoption, we are seeing signs that it's getting adopted. So I would like to wait for a few more quarters to see that the customer adoption is growing at a good rate.
Okay, so of course there's been pressure in the domestic business unit, especially from contracts coming in from the government. There's been a sense lately that there has been issues with respect to delays, with respect to payment, with respect to in general IT companies shying away from government IT contracts. Is that a concern? Of course that's not that large in terms of your revenue stream, but has that been a concern for you, and with the new government now have things gotten slightly better?
So I think the way we have taken our approach is that we have invested in this market for a very long time. So we are looking for all the key engagements and we execute those engagements. So now also we are bidding on some important mission critical engagements. Okay. So I have nothing to call out.
What's the kind of order book that typically...
We don't give order book.
Okay.
Even globally we don't give it. So.
Okay, lastly, I didn't catch the answer that you said. You did say you didn't want to give guidance, but you've always beaten NASSCOM's industry estimates. You will continue to do so for FY16?
I'm not giving guidance of any kind.
Thank you, Kritika. Kenan won't let the ladies have the last word, so go Kenan.
Yeah, just a clarification from Rajesh. In terms of your investments, which is for the consolidated numbers, so investments are at 62.17 billion rupees, but the figure for March 31st was 17.54. Just wanted a clarity on what is this difference?
It's essentially the short-term money market instruments where the dividend was to be distributed. About 5,000 crores of dividend was distributed in the first week of July. So on June 30th, it just shows the money market instrument number.
And even though Greece is not affecting, just wanted to check your euro dollar. How are you managing that? If you could give us some color.
Manage euro INR, and euro INR is actually at a fairly decent level. It's just about 70. So I don't think the market seems to have digested Greece fairly well. That's as good as we know.
And one question. In terms of, even though you've given industry beating hikes, the attrition is a cause of worry in that context. Do you think you will require to resort to pay hikes out of?
I think as I said, no, I don't think that we see it like that. I don't think we see it like that. As I said, the attrition numbers are to be looked at in the context of these two things. One is the lag effect, because we've had high attrition numbers, and when you do a LTM calculation, it's going to happen. Second thing that is it's a seasonality, and so we are generally well placed. I think we have to take some actions. We have taken some actions. We are investing in training and other things, and we feel that over the next few quarters we'll get it under control.
Thank you very much, everyone.